Okay, looking at those Ajax numbers today. A year ago in Ajax, across all home types, we had 466 new listings come to market. We had 297 sales through the month of March 21 and 145 active listings, which carried over into April 21. If we fast forward to February 22, we had 252 new listings come to market, 162 sales through the month, and 96 active listings, which carried into March. And in March, we had 395 new listings come to market. Big upswing, 212 sales, so a big pull up in sales as well, and 158 active listings, which carried over into April. So, if we look at year over year, definitely this year you can see in the numbers is a little bit softer. We had less sales in March 22 than we did in 21, less listings come to market, but we actually have more inventory left hanging around. So when you hear the Toronto Real Estate Board indicating that the market has slowed and maybe gotten a little more sluggish, you'll definitely see that through the numbers here. If we're looking at the money, 975,000 was the average sale price across all home types in Ajax a year ago. February 22, we were at 1,273,000. Currently trending at 1,222,000. 222. Buy lottery tickets. Across the GTA, we did see a decline in the average sale price in March 22. So this is what we are seeing across the GTA right now. The SNLR, it stands for Sales to New Listings Ratio, also known as the absorption rate. It tells us out of the homes coming on the market each month, what is the percentage of them that are actually selling. So this is how we actually determine whether it's a buyer's market or whether it's a seller's market. So 63.7% of the homes that came on the market a year ago in Ajax sold, 64.3 in February 22, and currently trending at 53.7. So, pardon me, in terms of what's a buyer's market, what's a seller's market, anything under 50% tells us that there is more supply than there is demand. So that would be indicative of a buyer market. Between 50 and 60%, where we're trending right now in Ajax, that would tell us that there is enough supply to meet the demand. So that's what we would call a balanced market. And then anything over 60%, you guessed it, there is more demand than there is supply. And that would be where we've been the last probably year and a half. And so that is what we would call a seller's market. The MOI, or the months of inventory remaining, tells us that if no other homes came on the market after today at the current rate of consumption or the current rate of buying, how long would it take to completely deplete that inventory? So a year ago, 0.5 months of inventory, 0.6 in February, currently trending at 0.7. So what we're seeing here is we're seeing an increase in the amount of inventory hanging around and a decrease in the absorption rate. So for buyers and sellers, this is actually where you want to focus. So for buyers right now, being as we are in a balanced market, we're definitely seeing more inventory hanging around. And if you look at the numbers from February to March, there's definitely more inventory hanging around. There's definitely more houses to look at. There's lots more coming out on the market. Those ones are going to face a lot of competition. We know that a home gets its most amount of exposure in the first 2 weeks on the market. So if you're not having any success there, definitely get into these active listings and dig through those. I guarantee you there's opportunities there. So sale price to list price ratio, homes selling a year ago, 113.4% of ask, 130.4 in February, currently trending at 123.4. I've said this in other videos. The sale price to list price ratio is an absolutely horrible gauge of what's going on in the market. It is such a grossly overstated number right now. When you're seeing SPLP that are in the 110 and under, I would say that's sort of normal. Houses going over asking. When you start seeing them in the 120s and 130s, it's agents and sellers. I'm not just pointing the finger at agents here, but it's been a predominant strategy in the market in the last year and a half to drastically underprice homes. And as an example, that would be, you see a home listed at $599, but they're going to sell it at $1.1 million. We see these all the time. We see them every week. And when we're in a market like we're in right now, where we are transitioning a little bit, and the market hasn't really shown us a clear direction. I think we need another 30 to 60 days to see where the market's going to go. But in a market like this, there's a lot of scrambling going on, and so we're seeing these continued really underpriced homes to get lots of eyes on them, to focus on the date in which they are going to review offers. So yeah, please don't base your market decision on this. It's grossly overstated. Where you want to base your buying or selling decision is on the SNLR and the months of inventory. Those are what you want to focus on. And if you have questions about those, you can feel free to reach out to me, and I will absolutely happily talk to you about those in more depth. Days on market to get a home sold, 7 in March. Last year, February, we had 6, currently trending at 7. So Durham region is staying extremely hot compared to what's going on in York region. Definitely Simcoe as well, but definitely York region, Toronto, the market has cooled, but I wouldn't say Durham necessarily has. Yet by no means, when you have 0.7 months of inventory or 7 days selling time, it's still a very, very hot market. If you have any questions about any of the info I shared here, or if you're thinking about making a change and had some questions about your house, please feel free to reach out.